Hello there, this is Deborah Pratt Johnson Burns. I'm the founder of Literacy to Legacy Mentors, Reframing Your Financial Future. As part of our Financial Freedom Education and Entrepreneur Spotlight series, which I launched last week, I have my esteemed guest, John Heo. John is a 30-year tax strategist and accountant, and he is going to share with us some of his strategies he's used over the past 30 years with his clients and his colleagues and his family and friends. And we look forward to sharing those with you tonight. So thank you so very much for tuning in. And I'll just start this off with, John, 2021. There are a lot of really amazing things you can do to save your money on taxes so that A, you don't give all your money to the tax man, and B, you have more money to keep to save and invest. So let's talk a little bit about what are sort of the top 5 things you can do as an individual small business owner, which you focus on, to really save money for 2021 on your 22 tax return on April 18th. Look forward to hearing your tricks and tips.
Well, in lieu of the fact that tax planning for 2021 is over, we're going to try and maximize your 2021 tax filing due this April. So some of the things I advise clients to do is, if you can itemize, that's the way to go. Because the standard deductions were doubled under the tax changes in 2018. A lot more clients were able just to take the standard deduction. That was more beneficial for them. But I always encourage clients to go through their expenses, medical, charitable, taxes, interest, just to make sure that you're not cheating yourself by possibly being able to itemize in lieu of the standard.
Right.
So
and the standard deduction for individuals and married couples filing jointly, be helpful for our audience to know those 2 numbers and what you have to go past in order to itemize.
Right. So for individual single filers, your standard deduction is $12,550, and for married filing joint is $25,100. So we need to get over those thresholds in order to itemize, make it more beneficial for you to itemize. So one of the main things I always ask the clients, first of all, top line with medical, were you out of pocket a lot for medical? Because you could take advantage of that if you itemize.
Right. Love to know a little bit about that. So for instance, your, let's say AGI is, I don't know, 100 grand, and you want to take the medical deduction. Isn't it 0.75?
Yes, 7.5% of your adjusted gross income.
Okay.
In order to get the benefit of itemizing your medical deductions. And that includes doctors, dentists, eyeglasses, medical premiums, long-term care premiums.
Excellent. Excellent.
Yes.
So there are a lot of things that fall under that category of medical that maybe people know or do not know. Also, for instance, your copays and your premiums, as you mentioned. And so just really take a deeper dive on all of your medical expenses if they happen to be large, over a certain amount. Yeah. And I know for us, ours was very high, and I was happy to take the deduction. I mean, how fabulous is that? So thank you for that. Tell us a little bit about what's going on in the tax laws and the tax code in terms of investing. So in other words, capital gains tax. My understanding is that a colleague or a client could make up to $40,400 as an individual and $80,500 or so for married filing jointly. So that means that any capital gains up to those amounts are actually 0?
That's correct. Yes.
That's amazing, isn't it?
That's right. If you are, of the lower income category, your capital gains rate could be 0. Then it jumps up to between 15 and 20%. For the higher income individuals, 20%. And then the real high income individuals may have to pay an additional 3.8% investment tax on their earnings. So that's
wow.
Yes.
What is the threshold for the 3.8? Is it over $500,000 in earned income?
Yes. Yes.
Okay.
That's correct.
Good to know, because there are many people looking at this replay, and they come from all walks of life, as well as all income strata. So let's also talk about the IRA 401k contributions. They can be made up until April 15th?
That's correct. The IRA, you have up until the date you file to make your contribution for 2021. So you could still sock away in an IRA, traditional IRA, $6,000. You get a tax deduction for that, and if you're over 50, you get the catch-up contribution of $1,000. So you can potentially do a contribution of $7,000 before you file your income taxes, and you'll get credit on your 2021 return.
That's very attractive.
Yeah.
Absolutely. And the good news about Roth is, which is obviously a very hot topic these days, which is tax-free after the age after vesting for 5 years. You can take out the money that you initially put in, as well as the money that you have earned in capital appreciation, as well as dividends. Could you talk to us about that vesting period? What is that exactly, and what does it mean?
Okay. Well, the vesting period mainly refers to contributions and earnings after age 59 and a half.
Okay.
So you could take out, because your Roth contribution is you're using after tax dollars. Let's say you put in $10,000. There's no penalty if you take your contribution out. You can always take that out.
Mm-hmm.
But the 5-year rule applies to contributions and earnings.
I see.
As not incurring a penalty, because there is a penalty under age 59 and a half. You say you got $10,000 in earnings. If you withdrew those funds before age 59 and a half, you would incur tax penalty on the $10,000.
Like a percentage, 10%?
Yes, 10%. Yes.
Okay. Okay. And this year, let's talk about, I think it's very much this year indicative of the child tax credit. I know it's been very much in the news of late. Could you share with us and enlighten us actually a little bit about what is the child tax credit? Who is it applicable for? And what exactly can parents, for instance, reap as a benefit to that?
Yes, the tax law changed in 2021 where they increased the child tax credit from $2,000 to $3,000 for those aged 6 to 18,
Mm-hmm.
and then increased the child tax credit from $2,000 to $3,600 for children under 6 years old. And a lot of that money was dispersed automatically through stimulus payments. So
Mm-hmm.
a lot of taxpayers received those monies already in advance, and they could elect out. But that's all reconciled on your 2021 tax return.
Okay.
And so if you did not get your advanced stimulus payment related to the child tax credit, you will get it when you file your return. So you'll get that benefit then.
I see. And then in terms of the stimulus payments, and this is really an important point, so this is critical that people understand this. We all got monies in January and in, I believe it was April, and it was various amounts depending on what you made, et cetera. But and some were flat amounts. But the point is this: those are not taxed.
That's correct. They are just reconciled. The first stimulus 1 and 2 were reconciled in your 2020 tax filing. So that's gone. So the latest payment of $1,400 per individual, everybody got a check or should have got a check for $1,400.
Mm-hmm.
If you did not, then that is another reconciling item on your 2021 tax returns. So accountants have a little more work this tax season because we need to reconcile advanced stimulus payments, advanced child tax payments.
I see.
That's all questions we have to ask the clients and make sure, we're clear on those numbers, because IRS will check on those. They do calculate, payments they send out to taxpayers versus what's reconciled on their tax return.
Excellent. And John, in terms of 2022 planning, because we all meet with our accountants once a year, but perhaps potentially we also meet with them quarterly, depending on if we have a small business, such as myself, et cetera. What are some of the strategies and planning recommendations for 2022? What do you think people should be doing now for planning for 2022 April? 23, excuse me. 23,
I understand. Yeah, just sometimes you want to try and maximize your itemized deductions, meaning if you can plan, if you have maybe some large medical expenses coming up, surgeries or things like that, major dental work, you want to try and structure those into 1 year if you can, afford to do so.
Good point.
Because some years you may be able to maximize your medical and itemize and get the benefit from itemizing, things like that.
That would be outstanding.
Also, strategies are, which you and I talked about before, is offsetting capital losses with capital gains, that sort of thing.
Could
That's
you
another
explain that a tiny bit for our viewers?
Meaning that if you have several stocks that have not done well, that you're just holding on to, you may want to sell those and offset those with some of the stocks that have performed well during the year.
Okay.
That's
So in other
something
words, take the
that's an on-
3,000 loss carryover and put it against the capital gain that would be added as ordinary income on your tax
Yeah.
returns,
Yeah,
supposedly.
or if you have maybe portfolio losses, 10,000 plus, you want to try and offset those with some of the gains.
I see. Okay.
You know,
The other
like-
thing which I found interesting, and I know this was tax changes that I believe happened in 2018, and that is that when you have property, whether it be your primary or secondary, but mostly primary, you can only write off 10,000 in property tax. Is that correct?
combination they call SALT, state and local income tax. That's a combination of state income tax from your salary, property taxes on vehicles, real estate taxes on your home.
Okay.
Those are capped out at 10,000.
And
For
that's
a married
a
filing
new,
joint, 5,000 single.
that's a new development in the past couple of years.
Right, that started in 2018,
Okay.
and there's a lot of other things that were eliminated. Like I had told you before, one thing that happened with the COVID, they had eliminated the home office deduction, and a lot of individuals, employees who were working at home, were not able to write those off.
Which is very
And so
sad.
it's just, that's something I think they should have reinstalled immediately, but
Right. And typically, if you are an entrepreneur, which a lot of us are, and we're working from home, we could typically take a percentage of our office expenses.
that's
I think
correct.
it's like something like 13.5%.
Whatever your calculated home office area versus the square footage of your home,
see.
that's the percentage, that's the calculation for that percentage.
I see. Okay. So I just remember that number for us, perhaps.
Yes.
But so, yes, so that's no longer, which is a pretty major change.
For self-employed, yes. For employees, no.
Exactly. Right.
Yes.
Yeah.
And then also along with that, like if you're a salesman working for a company, any unreimbursed expenses you used to be able to write off on your itemized deduction schedule. Not anymore. So I encourage clients who are in sales field or get a lot of expenses that are used to be reimbursed or not reimbursed, they would be able to write those unreimbursed expenses off.
Okay.
So I ask them to go to your employers to see what you get the maximum reimbursement from your employer, because they can write that off. You can't.
That's right. The other good news, I think we always need to look on the positive side of things, which at least I do. And that is, yes, Social Security recipients got a pretty nice bump for the first time in 25 years, right? 5.9%. Now, of course, that has to be taken in context because inflation is now 7.5%. So you really didn't get much of anything at all, but frankly, it's better than what it was, correct? Because it's usually what, 2%?
Yes, if that, somewhere in there, 1 to 2%. That's what it has been.
Right. So I think that's very, very attractive. And we understand that commensurate with that, the Medicare premiums went up as well. Right?
Yes. So the Medicare Part B max, I think the premium is like $170, somewhere in that range.
That's right. That's right. So these are all considerations, and hopefully my friends out there and our friends who are listening and taking notes, there are a lot of things to notate here in terms of planning for 21 and 22. I think the one thing I've learned in my own experience, which saves an enormous amount of time, and I can't tell you I've done this perfectly up until this point, but I now have mastered it because I know it's going to be much more advantageous to do so. I start keeping my numbers from Jan 1 throughout the entire year, so that when I need to give it to my tax attorney or tax accountant, et cetera, I have all the numbers in front of me and I don't have to crawl through all the numbers in my accounts, checking, savings, et cetera. Because that's an enormous waste of time. And I understand people don't have the time to maybe keep track of it as they go, but all I can say is, please do yourself a favor. Your future self will thank you in actually writing those itemized expenses down as they're incurred.
Right, that's correct. It's better to keep a monthly track than having to do it all at year end. It's because it is time consuming. Preparing for your taxes, going through all your records and all your record keeping, it takes a significant amount of time.
Absolutely.
It really does.
And I guess the one last thing, which I've been talking to some colleagues about, if you have international equities, You won't probably get your 1099s until the end of February. It's typically
Yes.
February 15th, 18th, something like that. And actually today is the 16th, so they're coming this Friday from various, brokerage houses, et cetera. But friends of ours have actually said that the international ones aren't coming until the end of the month. So that's an interesting development. I wasn't aware of that.
Yes, the IRS put a lot of pressure on the brokerage firms and their back office accounting functions that they're required to report cost basis, sale proceeds,
Right.
capital gains, dividends, interest on all your earnings. They're required to have that accurately prepared, and it does take them time.
Oh, absolutely.
They're supposed to be given to the clients January 31st, but it's too much of a burden for them to have those numbers correct by then.
Right.
That's why we're waiting every year for that until
That's right.
sometimes like the middle of March for like a correct.
Wow.
And they'll even send out corrected statements after they've issued, say mid-February, and there's corrections, you'll get a corrected 1099. Then you got to make those changes. Yes.
Right. I think the one last thing to share is that have a really wonderful relationship with your accountant and tax attorney and tax strategist, because I've had the good fortune to sit with my tax attorney and accountant for years. I sit with him and we go over this line item by line item, because I'd like to save as much money as possible and get more back so I can invest more, of course, but also to really understand the structure and nature of taxes, because there's so many benefits, John, to doing that and having that kind of relationship versus just handing it off to somebody. You're not doing yourself a favor by doing that. It may be better I recommend and strongly recommend that you actually sit with your tax person and really understand what he or she is doing for you, and really understand the nature of the beast, so to speak, because knowledge is power, right? And there's information perhaps during that exchange, like any exchange at any time, that brings up other ideas and other issues perhaps that maybe you didn't think to bring up, because it can be a pretty stressful time, right? And the more relaxed you are about the process and the more organized you are, the more you'll win. As far as I'm concerned, the more you'll get back, either the more you'll get back or you'll have a net zero, you won't pay anything, you won't have to get anything back, etc. So this has been extremely enlightening and very helpful. Share with us, if you would, John, what are your contact information credentials? Could you share with us your phone or email? You're available for a complimentary consultation should anyone out there need to change their tax accountant, need to understand their taxes better, etc. Tell us a little bit about your availability.
Okay. Yes, I'll give you my cell number. If anyone has any questions, I'll certainly talk to them. Call me on my cell, 203-249-4360.
You want to do that again?
You want to send me an email, you can send it at jahayo@optonline.net.
Fantastic. Could you just repeat those again? Because people don't always get them on the first round.
That's correct. Cell phone, 203-249-4360. Email address, jahayo@optonline.net.
Outstanding, John. Thank you so very much. And you give like a 15-20 minute complimentary in case anyone has any questions, etc., as I do. So thank you so much for your time today, for your excellent insights and experience, strength and hope here. And I will give you my credentials, and that is, it's Deborah@literacytolegacymentors.net. And it's just as it sounds, it's pretty easy. And then my website is literacytolegacymentors.net as well. You can actually sign up for all of my weekly educational series online on my events tab. And then should you not be able to, attend all of my events, we do have replays underneath the events tab called Events Replays, and you can watch them at your convenience. This is a complimentary public service that I'm offering to the world because I think we all need to know more about financial literacy. We did not learn it in school. And unless you're a finance major, there's a lot of really valuable information here, maybe for them too, that we hope you take away and learn to become more financially savvy and independent. So thank you so very much, John. We'll look forward to having you
Yep.
again as our guest in the near future. Good luck during tax season. And I thank you all for being here, and to your prosperity. Have a terrific rest of your day. Bye.